forgot to turn on the music before going live. Oh my God, you guys. Wow. I'm back after a little bit of a break. So we got a little bit of some last minute adjustments here. Come on in. What are you waiting for? Come in. Welcome. Tuesday, 3:06 p.m. Central. A little late. My apologies. Thank you for waiting. I really appreciate it. October 18th, day before earnings. Wow. So exciting. I am so excited. What will happen? What will happen? What will happen? I don't know. Let me know if you can hear me okay in the chat. Let me know where you're from. Confirm that you can see me okay as well. Very exciting episode today. So, a lot to talk about, obviously. It's McLovin. What do you guys know about McLovin? Look at him. He's from Aloha. He's from Aloha. He's from Hawaii. My God, I'm a mess today. Come on, everybody. So, a couple things we're going to do today. We are going to run through my brand new, first ever trial, I call it, for Q3 earnings. And I'm going to walk through my model of what I think the earnings per share is going to be adjusted. Thank you, Matt Smith. You know what I'm talking about. Of where I think the stock's going to end up. Obviously, I used a lot of inspiration and a lot of I learned a lot from a lot of the great folks out there already on YouTube and Twitter. Just to name a few: Rob Maurer, Matt Smith, James Stevenson, Gary Black, Stephen Mark Ryan. There's so many other people out there that have gone through. Dave Lee, I think, does them as well. But there's many people out there that do this 1,000 times better than I can. Okay, so. But I still feel like it's a good exercise for me to sit down and walk you through my thought process and just have another figure out there for you guys so you can think about, okay, how could this earnings end up, right? There's a lot of different variables that's going into this earnings that has been covered to death. But the thing that I've been struggling big time with trying to model it myself is that the amount of variables that are happening this quarter, especially around foreign exchange, so the difference between the dollar and basically any other currency, since we are based in the US and Tesla's a US-based company, is becoming very difficult to sort of, at least for me, think through and figure out how that's going to impact the company's financials for the quarter. Then we have a Shanghai factory that's fully ramped up. Theoretically for quarter 3, since they shut down in Q2, so that's going to have an impact. Austin and Berlin are also ramping, so they're in the middle of going up. And then you have about 20,000 cars in transit between in quarter 3, so they delivered roughly 340,000 cars. They produced about 360,000 cars, so there's about a 20,000 car gap where they've built the cars, they've taken on the cost, but they haven't sold it, right? So there's a lot of different variables going on here. So let's sit down, walk through the model, and then once we walk through the model, I'll take questions. We'll sit down and we'll also do a Q&A. So anybody that wants to jump on and ask a question live, the only thing I ask is camera on, decent microphone, decent internet connection so we can see you and hear you clearly. And then after that, we'll just kind of think through all the different variables. And of course, as we're going through the exercise in the comments section, definitely share your views, your thought process, how you're thinking about this quarter, and if we might potentially see a surprise. So from the get-go, I will say that I am higher than the analyst estimates so Wall Street right now from an adjusted basis. I just learned, but when you think about the EPS that is attributed to the company, earnings per share, what you see out there from the consensus perspective backs out what's called stock-based compensation. And so the number I'm going to be sharing, my final number, is going to account for that. And so it's going to be adjusted GAAP EPS. So we make sure that we're aligned. And the other thing that I also found through my research is that a lot of people, when they think about EPS, there's a lot of different ways of interpreting EPS. You have GAAP EPS, which GAAP, if you don't know what it stands for, generally accepted accounting practices. And there's also non-GAAP, and there's non-adjusted, and then there's adjusted. So you have all these different permutations that could arise from that. So anyway, enough talking. Here we go. Ready, set, and share. Okay, we'll make this bigger so y'all can see it. Now, we'll start with revenues, and then we'll go down the list. Let me zoom in for you so you can see it a little bit better. Here we go. So this is what mine looks like. And of course, we also have on the sheet, I've listed the previous quarter as well, Q2, just as a reference for y'all to see. So do I want to go down here? I think I'm going to go down here because then you can see this a little bit better. Can I move myself? Of course not. Why would I be able to move myself? Really? Doesn't let me move myself? Come on, StreamYard. Auto sales. Last quarter, 13 billion, 6. For Q3, I'm estimating roughly 17.9. Auto rec credits, 250. Auto leasing, 640. So let me walk you through my thought process here. The auto sales, the way I think about those is that there are price increases that are have happened from Q2 to Q3. But then I'm having a tough time sort of thinking through how they're going to flow exactly to that quarter, because these are deliveries that are probably taken from orders that were placed more than 3 months ago. So these price increases happened a while ago. And a bulk of Tesla's price increases happen around that time, but I'm not really sure what the timing of these sales are going to be. Not to mention that for the last 6 to 9 months, call it, there has been that sort of price increase activity. And the backlog for the company was the largest, it seems like, about, call it 3 to 6 months ago. So I don't want to make too many assumptions that the price increases will flow fully to the revenue line for this quarter, because it's my first time and I want to be somewhat conservative. And then the other variable as well is that for full self-driving and other sort of things that Tesla can offer that are optional for the consumer that can add a lot of margin, I also want to be careful and not attributing too much in that quarter as well. So maybe think of my approach a little bit more conservative than usual, but it's still like the EPS still comes out to be higher, which I would love to hear your thought process behind that and how you're interpreting that, so you can help me think through this. For auto rec credits, so my thought process here, the reason why I went 250 instead of 344 is that, let me make it just a little bit bigger. There's less sales from other automakers in the last couple quarters. I believe that trend is going to continue, and their EV sales as a proportion of the rest of their sales is going up. So even though they're not selling nearly as much as Tesla, the total EVs they're selling versus the rest of their sales is going up. But the entire auto industry, save Tesla, is coming down. So in my head, I'm like, okay, so this probably means that there's less auto rec credits being sold out there. And so that's why in comparison to Q2, I went lower. Now, this number is a crapshoot, from what I found in my sort of research in the past few quarters and finally sitting down and putting this to paper. This number can be whatever. And if you look at the previous quarters, so if I pull up the last earnings release from Tesla, you can see in the rec credits line here, 354, 279, 314, 679, 344. It doesn't seem like there's any rhyme or reason as to why they're moving like that. So that's why I ended up at 250, because I think those dynamics are going to impact that line quite a bit. And then auto leasing, I kind of thought of it as as a proportion of sales, it's going to go up, but because the interest rates are going up, less people are going to take a lease. I think they're just going to opt to buy the car outright, because it just makes more sense to do that under a high interest rate environment. So I believe that the auto leasing as a proportion of total sales will come down, but it will go up because there's just more cars being sold, about 100,000 more versus last year, right? Or last quarter, excuse me. So my total auto revenue is 18,869. And then for energy, I am assuming that there's going to be significantly more sales this quarter, mainly around the comments of Martin Viecha and others at Tesla that say, hey, we finally have all the batteries that we need to do what we want. And so in my head, I'm like, okay, if that's the case, then I would expect energy to start really ramping for real. If we look at the last few quarters for Tesla for energy, why didn't I add more than just Q2? If I'm keep going back to this stupid thing, I'll fix that for next time. My apologies, y'all. 801, 806, 688, 616, 866. So it's higher than the last 5 quarters. But if you have everything you need, we need to start seeing some increases. So I'm assuming that Tesla's really going to start ramping energy starting in this quarter. Really last quarter, but this quarter especially, Q3. And then service is another. I'm sort of assuming, a larger fleet, more sales this quarter versus last. As a total from that perspective, I assume some sort of proportionality. So I assign a value that's proportional to how many sales they had this quarter, plus their fleet growing by that number. So that's how I write 1.7 billion. And so my total revenue number is 21,600,000. Now for cost of revenue, for this piece, what I'm thinking through is, even though the foreign exchange impact is going to be realized here because of how Tesla is purchasing product, I still feel that the efficiencies they're going to gain from having a fully ramped Shanghai and a more ramped Berlin and Austin and a more efficiently running Fremont and really the entire network because of the layoffs they had a few months ago, these are all things that are going to enable them to lower costs quite significantly, in addition to the signals we got from Elon saying, hey, I think there should be a Fed rate decrease. So what the signal that I get from that, hearing that, is, hey, we're starting to see things in the supply chain that indicate that our costs are coming down. So you don't have to keep jacking up the interest rates. Inflation's coming down. And so proportionally from a cost perspective, the 12.9 is significantly less per vehicle than the 10.1 number if you compare it apples to apples. I did a quick math thing down here. Per product, per car, the cost to make a car was about 40,000 if you add up those two numbers. For Q3, I'm assuming the cost per car goes down to about 36,000. So that's roughly a 10% decrease. And that may seem like a big jump, but I really do think the difference in cost per car is going to be dramatic enough, especially Q2 versus Q3, because you have Shanghai fully ramped and because Berlin and Austin are going, and because you've made those layoffs, that you're going to get a lot more efficiencies than I think people are realizing. And I'm sort of using I was at Tesla and I was there for a while, and I kind of understand that when these changes are made, things are just way more efficient. So this is where I'm trying to influence the model based on what my gut tells me. So I hope that makes sense. The cost of the vehicles will be less per car because of what I just described, and it will largely offset the impact, any impact foreign exchange would have on this. So that's how I arrived to this cost of revenue number. And then for energy and services, I sort of assume a very modest sort of margin for energy. So if we do a quick margin calculation here, and we'll look at the sort of the margin that I'm assuming for energy, it's 11%. It's still ramping. I don't think they're fully at ramp there. They still have a lot of ways to go. But it's sort of a margin that I will assign something that's in the middle of a ramp. And then services and others, again, just kind of proportional. Just thinking about it proportionally, they're making a little bit of money, about 100 million, which is double what they made last quarter. But again, thinking about those layoffs and, hey, we're more efficient. So our margin should go up a little bit higher. So our total cost of revenue is going to come down to 15,817,000. And so if we take our revenue and minus out the cost of revenue, we get our gross profit, which is $1.791 billion. Okay. So that's my revenue and that's my cost. Now let's look into our operating expenses. So this is really any expense that is outside of building a car or building energy. So this is like back office, stuff that doesn't where your hands is sort of like indirect. You're indirectly running the business. You're not directly part of running the business. So back office work, so on and so forth. A lot of salary people fall into this bucket. So I'm assuming a little bit of an increase in R&D because of bot and semi that's kind of trailing off now. So theoretically the R&D for that should come down a little bit, but it's a small program, I'm assuming, and the bot's still small. So, but I'm still thinking, hey, maybe they're going to be spending a little bit more money because they want to keep sort of ramping the business, right? SG&A, I'm assuming about $1 billion, slight increase from previous quarter. Now, the one thing that that's counterintuitive here is that, yes, there were layoffs, and yes, there were people removed from the company, but I still feel like the total labor that's going into the company is increasing because the size of the company has increased so much. So to try and temper my sort of bullishness, quote unquote, around how efficient Tesla is going to be in the coming quarters, I'm saying, you know what, SG&A is still going to be somewhat proportional to the growth of cost. So I'm curious to hear your take on that in the comments once we wrap this up. But I'm assuming about $1 billion for that. Restructuring about 70 million. Last quarter they had 142 again because of those layoffs, and I'm assuming that those sort of restructuring expenses will still flow into this quarter, into Q3. And so I don't want to count it as zero. I want to say, hey, I'm assuming that there's still going to be some restructuring that's going to happen because of that. If it's zero, great. And so the total operating expenses, so the additional expenses in running the business, is roughly $1.77 billion. And so if you take your gross profit and you back out the total operating expenses, it's $4 billion. So $4 billion income from operations. Last quarter was 2.4. So if we take a comparison here, it's $1.63 billion additional. It's $1.63 billion more in net income versus previous quarter, which is nice. It's a lot of money. It's great. And it's interesting to see that number too, because again, this is a quarter where they missed, right? But the number is so much higher than the last quarter. The market. It's the market, y'all. That's how it works. I have some thoughts about that. I'll go through it. Interest income, when I was looking at the statement, I didn't see a lot of variability, so I kind of just hit the number in the middle somewhere, 30. Same thing with interest expense, same thing with other income expense. And these things don't really influence the total number that much, the income before income tax and the tax hit. So I'm assuming some very small impact. So 4039 for income before income tax. Then provisions for income taxes, I'm assuming 275, which again is kind of proportionally in line with the other quarters. I'm just assigning it to Q3. And so our net income number after taxes and all these other numbers, it's $3.7 billion, $3.764 billion. And then if we remove the non-controlling blah, 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 which is, I mean, this is like the longest line I've ever seen in a report. Net income loss attributable to non-controlling interest and redeemable non-controlling interest in subsidiaries. Okay, 20. And again, I looked at the sort of the other numbers. I'm like, okay, some are higher, some are lower. And last quarter was 10. Okay, 20. These numbers are not going to change the earnings too much. And so the net income to stockholders, so this is the number that gets used essentially to calculate the EPS or the earnings per share, is 3.744 billion. And then if we look at our weighted average shares, we have 3.12 billion shares outstanding in basic, and then 3.48 diluted. And if we take the earnings per share and we divide it by these numbers, our basic earnings per share is 1.2. Our diluted earnings per share, which is all shares, basically, think about it that way, is 1.8. And then there's an adjustment that I made based on Matt Smith's guidance from Good Soil. Thank you very much, Matt, which is in order to arrive to a number that you can compare to the rest of the market, you need to back out stock-based compensation. So basically, when somebody gets paid at Tesla with stock, that number gets removed for this calculation, and it's roughly 10 cents per share. And so if I add that back in, the adjusted EPS is $1.18. So that's my number, $1.18. Wall Street's at 102. And so since Wall Street's at 102, I am roughly 16% higher, which is quite a bit higher. Now, what I find really interesting about this is that if I take my total revenue and I compare it to some of my assumptions around cost, the total revenue per car actually comes down. If you compare sort of apples to apples here, because of those cars in transit, right? Which kind of makes sense, plus the foreign exchange impact. And so I'm curious to hear y'all's take, right? I'm curious to hear y'all's take about what you think about this. I'm going to go ahead and post the invite link in the comments. So if you do want to come in and ask a question right here, and I'm also going to pin it at the top as well. So, let me see. If you want to join and ask a question live, follow this link. Must have camera on. Come on, y'all. Don't be shy. So if you have any thoughts, if you want to ask a question, if you want to share some thoughts, if you want to criticize my work, which I would love, kind of help me do a little bit better job. But just to summarize here, y'all, 118. Adjusted EPS. And this is sort of how I've arrived to these numbers. Not scientific at all. sort of like a lot of art behind the thought process. And the reason why I picked this quarter, honestly, is when I was doing my research, I was always wanted to sit down and kind of figure out how to do this. I didn't want to do it where, I don't know. I wanted to pick a quarter that was going to be kind of crazy so that I can sort of test a lot of my like assumptions and see how it ends up versus the market and the actual numbers as well. And so because there are so many variables, I felt like I was more comfortable using sort of my quote unquote not a scientific approach and just a little bit more gut feel artful approach to see how close I get. And then I'm curious to see in the coming quarters how that methodology applies to calculating EPS because of how fast this freaking company is growing. There's so many variables that are happening. So anyway, what do you guys think? What do you guys think? Post some messages, post some comments. We'll talk through them. And I posted a link to join me on this live stream as well. The only thing I require is you have your camera on, decent microphone, decent audio, so that everybody can hear you, and we'll go from there. All right. Martian Investor, thanks for the perspective. It's different than the typical Tesla community and so refreshing to see different thoughts. Thank you very much, Ahmed. Really appreciate that. Thank you very much. When will earnings be released? They'll be released tomorrow around market close. So usually it's about 10 to 15 minutes after market closes. So call it 4:10 to 4:15 Eastern time tomorrow, October 19th. Excuse me. I agree. I see it around $1.13. Cool. So we're not too far away. Predict that Musk will say something super positive, super unrealistic to pump stock. He then sells 7 billion in a week right before closing Twitter. Yeah, I don't know. I don't know if he's necessarily gonna actually sell any more shares because he didn't make the point that he was done selling. But we'll see. Nobody knows. Herbert Deese is in the house. What's up, Herbert?
Good morning.
How's it going?
It's it's morning here in Deutschland.
Nice. I thought it was nighttime.
Okay, close enough.
What are you thinking?
Three quick things. So far in this quarter, I think before the quarter started, analysts kind of anticipated that the earnings would be crappy. But so far, it appears that the earnings are going to be surprisingly good across the board. Like Netflix just reported, and they're up like over 10% after hours. And that's kind of filtered into across the market. So it may be that we are going to get a really positive beat just along with everybody else. I was going to say two categories that I wanted to reference. One was, I think prior to this particular quarter, there were significant expedite costs because they were trying to scramble to get and it was in the several hundred millions of dollars. Yeah. And I think maybe the change in policy that they made at the end of the third quarter, maybe that'll reduce that, and maybe that'll be like, a surprise benefit. And as to what you were talking about in terms of the currency exchange issue, I think Matt Smith agreed with you. He thought that the currency exchange cost might be somewhere between 200 and 300 million, but that the savings and cost of goods sold would equate to about the same. So he thought it'd end up in a wash. So you said 118. What was your number?
Sir. 118 adjusted. Yeah.
Yeah. So I'm going to go 136 adjusted.
Wow.
Yeah, I think it's going to be a big beat.
And so, are you thinking? So is that so? How are you arriving to that? How are you arriving to that number?
Okay, I think costs are going to be materially lower because of some of the issues I just mentioned, and I think that the margins will be significantly greater than the last quarter, and it'll kind of be enough to bump us up to kind of like a surprising number. I think that's going to be the trend, that people are going to surpass kind of expectation.
I think so. I think what's interesting about that comment is that I think I agree with you because, again, you have a fully ramped Shanghai in Q3, and then you also have an Austin and Berlin that are ramping, so their negative cost impact is going to be less than the previous quarter, and then you also have efficiencies built in from the layoff. But Yeah. So I think around that thought process for the margin being much greater, I agree with you. But I think for it to be $1.36, it would have to be a quite a significant offset of the foreign exchange impact, I guess. Like, so it's almost like you're removing that $300 million impact from Forex, but then you're also assuming that they're going to make such great advancements in from their cost perspective and lowering that cost that the margin's going to be. So like, do you have a margin in mind? Like you're thinking 32, 33%, I guess, around that
30,
area?
31, 32, somewhere in
Okay.
that respect. But I think
Okay.
more it's the surprise items, because like, each quarter there's surprise items. I think
Yeah.
we're going to surprise on the upside, not the downside. So there
Okay.
won't be like the, Bitcoin impairment cost, those kind of things. And, a couple
Interesting.
100 million there, here and a couple 100 million there, you're talking about real money eventually.
That's true.
Yeah.
And the bigger that Tesla gets, the more of those you're going to get.
Yeah. Except
Right.
that next year I think is tricky because you have, I think, arguably we're in a recession or we're going to be in a recession.
Yeah.
And that's going to probably be offset somewhat by the EV tax credit. So, usually that would probably be a drop in demand usually, but the
Yeah.
EV tax credit will kind of like balance it out. So it
Yeah.
probably won't be as impactful as it would ordinarily be. But
Yeah.
but we don't know the rest, how the rest of the world is going to go and how China in particular, because that's kind of
Yeah.
the boat. I'd also be interested to see if you kind of announce a factory, because
Yeah.
that would obviously have a positive impact on the stock price.
Yeah.
I would think, and I expect the buyback to be mentioned, but I I think like a way I would do it, because I don't think they're going to do it now, and I don't think it'd be prudent to do it now anyway. I think it's
Yeah.
better to accumulate some more cash, but they obviously have thought about it. So I think they could say they've considered it. They're not going to do it this quarter. They're going to evaluate it each quarter from this point forward, and when it's appropriate, they'll do it. And
Yeah.
that would be kind of a positive, I think, message also, but kind of realistic. But I'm one who's against kind of dispersing the cash too soon,
Mm.
because you never know what crazy events might occur, and that saved up cash might save you.
Yeah. No, those are all great points. And I think the other thing too, before I let you go here and I bring up Ishan, is the 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 ways, so the setups for the positive surprises from what I found in the past happen typically when everybody's not expecting it. And I think right now we're in the sort of market where everybody's like poo-pooing everything. And the fact that you brought up sort of Netflix and sort of how the earnings are coming in positive could very well set the stage for a positive surprise, like you said. There could be very well could be. There's no better time for a positive surprise than now because everything's so negative. So
Yeah,
the percentages of something positive happening are greater.
yeah, the risk is
You know?
lowest, the
Yeah.
outcome's the best.
Expectations are the lowest. Yeah,
I
for
look
sure.
forward to your multi-person extravaganza tomorrow. I
Yeah,
will be
it's
there
gonna.
watching. I look
I
forward to it.
appreciate that.
Okay,
Thank you so
take care.
much. All
Take
right,
care.
take it easy, Richard.
Bye bye.
Bye. Bye. Awesome. Herbert Dees, longtime fan of the show. His name's actually Richard, but we can call him Herbert because he's the man. Ishan, bro, I haven't seen you in like 1,000
Yeah,
years. What's going on?
yeah, it's been 1,000 years, isn't it? So,
Yeah, dude.
yeah,
How you
man,
doing?
it's been a while. Yeah, good, good, good.
Yeah.
I
What can I help you with?
came on to talk about energy for a moment.
Mm-hmm.
Energy traditionally has been, well, low margins, and mega packs have been lower margin for a while. But we had certain pointers come in saying that Tesla is no longer as battery constrained as it used to be.
That's right.
And we've seen like some of those drone shots of, thousands of mega packs. Okay, not thousands, but a
A
lot,
lot.
right?
Yeah.
So, are you expecting like a significant margin uptake on energy driven by better margins on Megapack? Even though, of course, I mean, Megapack's always going to be lower margin than Powerwall. But yeah, uh, you know, that's one thing that to consider. And then if there is a better, margin line that comes in on that, would we finally start hearing more of Tesla's an energy company than
Mm.
Tesla's a car company? From
Yeah. Yeah, I think those are excellent points. So the way I think about it is that there's no better time than now for energy to actually become a substantial part of the company. I don't know if that's Q3 specifically, but it has to start now, especially with the comments around Martin Vieca saying that they finally have everything they need to do what they need to do. Elon has talked about in the past that he expects energy to match the volume, the size of transportation at some point with a faster ramp to get there. And so if that doesn't happen now, when is it going to happen? I feel like we have the perfect setup for it. Now, still as a proportion of the total business, energy is still going to be relatively small because you just don't have the manufacturing capacity per se. Theoretically, it's a lot easier to build a Megapack than it is to build a car because you have no moving parts, and it's essentially just batteries with housing, some electrical stuff, and you just have to figure out how to transport the damn things because they're so heavy and big. So you need a lot of like specialized transportation for it. So I do expect, let me rephrase that. I do expect energy to become a larger percentage of the company into the coming quarters. Even as auto is growing, I think energy should keep pace with the growth of auto as well. But it's all around how much manufacturing capacity has Tesla allocated to the Megapack project. Because, let's be honest, it's sort of been a forgotten part of the business for a while. Right or wrong, it's been, sort of been forgotten about, at least from an investor perspective. And I know Tesla has allocated a lot of resources to the automotive side, and they should have, because that's, they only have so many cells. I get it. I just don't.
But then they
think
did build a new factory, right?
They did, yeah. They definitely did, but it still takes time to ramp, and you got to hire for it, right? I still feel like we're a few quarters away, call it 2 to 3 quarters away from the margins of energy to have a substantial impact on net income, as an example. So, I think not until energy arrives to, say, I don't know, 3 to 5 billion a quarter in revenue, and they're running at 25% margins, I don't think we see any substantial impact until we get there. But it has to start now. There has to be a material increase from Q3 versus Q2. Otherwise, I'm going to be like, okay, what the hell's happening, right? Like, I'm really going to start like wondering, like, okay, what are we saving all these for Q4? What's going on? So, what do you think?
No, I mean, I agree that that substantial contribution to, I guess, EPS is a while away. But if you just look at Tesla Energy as its own company, like Elon says, it's a conglomerate of startups. If you just look at Tesla Energy, and if you were to compare it to other energy companies, right, where would it stand? Is it starting to get legs? Is what I'm interested in, because
100%.
that tells me, hey, is this like Tesla automobiles from 7-10 years ago?
Got it.
And of course, like being invested in Tesla stock, you get exposed to this as well. But this sort of brings in another layer of thinking and another, I guess, entire layer of calculations that I guess not only Wall Street but all of us have to do today. I mean, even with your predictions, what we saw a lot of thinking going into car production, gross margin on automotives, etc., which of course is probably going to be the pretty much the only thing that moves the needle on the EPS mark. But 2 quarters, 3 quarters, or a year down the line, are we going to see, let's say, 20%, 30% contribution to EPS from this side of things as well? And I think that's a very interesting thing to look at from an investor point of view.
Yeah, no, I agree with you. I think the fact that they're going to start showing that they're getting to the point should start pricing in some sort of movement into this, just like you said, just like 8-9 years ago. That makes a lot of sense to me. The question is, like, will the market realize that in a bearish environment, and how long is it going to take to get there? It has to be priced in at some point, But I think once it gets priced in, it's going to
as long as you want.
Yeah, that's true.
Please don't realize it.
Thank you, Ishan. Appreciate you stopping by, man. Thank you for stopping in. Take it easy, brother. Bye. Awesome. What a community we have here. Who is this person here in the comments? Oh my goodness. Oh, somebody was quicker than I was. Thank you very much. My headphones went out for like a hot second there while Ishan was talking. So let me repair them. I missed like 2 words that he said, but it got weird. Anybody else have any questions? Let me know. I'm going to repost this link. If you have any questions, come on. We'll talk about them live. Until then, I'll go through some comments and see what people will say. I believe there will be much more cost due to new warehouse in Illinois, cost of semi, and Cybertruck ramp. So I think what's interesting about warehouses is that warehouses are not very expensive to run. They're very, very low cost, especially reflected in comparison to manufacturing. Manufacturing is way more cost intensive than running a warehouse. Semi should still be quite small, especially because they're probably making like single digit vehicles, and the amount of folks that are working on that product is going to be way less than the cars. And Cybertruck is just getting started, so there's still going to be a very low cost. So I disagree. I don't think there's going to be that many costs associated to those projects. If anything, Cybertruck's probably going to be mostly in R&D still, and Semi is going to be quite low, especially because a lot of the parts are shared with Model 3 from my understanding. So yeah. Are you doing a Q3 earnings live stream tomorrow? Yes, if you haven't heard. Oh my goodness. Herbert Deese kind of talked about it a little bit, if you know what I'm talking about. Let me go ahead and bring this up for y'all. Tomorrow, we're going to have a crazy live stream. It's going to be a wild live stream. Why, might you ask? Why would it be wild? That's because we're going to have like 7 people on. And the people that we have on, you might know. Let me go ahead and share my screen so you know what I'm talking about. Share screen. Bloop. Do you recognize those faces? My goodness. We're going to start at 2:45 Central, which is roughly 15 minutes before market closes, on this channel, as well as Ross's, as well as Nick's, as well as Yashu's is going to be multicasted. We're all going to sit down and we're going to analyze the earnings live. We're going to talk about them, say 20, 30 minutes before they get posted. We're going to talk about them all through the live stream. All through the release of the earnings. We're going to go through each page of the deck and try to break it down for y'all. We're going to listen to the call, and then we're also going to break down the call. So there's going to be a lot. It's going to be a long, think of it as like a 4 or 5 hour event tomorrow. We're all going to be either exhausted or drunk by the end of it. Maybe both. But yeah, big coverage, large coverage tomorrow. Please come check it out. But it'll also be on Ross's channel. It'll also be on Good Soil as well, Matt's channel, Matt and Emmett's channel, Yashu's and Nick's as well. So make sure you stop in and say hello at the very least. So yeah, thank you for the question. It's going to be a blast. It's going to be such a good time. My prediction for tomorrow will be the most epic live stream of all time. Let's hope for that. Hopefully I do a good job. Obviously, everybody that's going to be on are excellent and they're all extremely knowledgeable. I'll try my best to sort of create an environment for all of us to be able to share our ideas as deeply as we can. Of course, it's going to be tough not to step on each other with 7 people on, but it's going to be fun. It's at the very least, it's going to be entertaining. So we'll see. We'll see. Whoa, that's like the Super Bowl of live streams. I agree, right? So lucky to be able to work with these folks, man, and sort of sit down and do stuff like that. So it's super fun. It's going to be a blast. What do I think of DraftKings? I've never used it. How do you count in sale of used cars? So I actually, I kind of don't. I kind of assume that it's going to be proportional to the number of deliveries that they have, and so I just bake that into the sales, the automotive sales for the company. It's still quite a small percentage of the company still, but as it grows over time, then I'll look to break that out. Especially as I learned how to do these quarterly models better, I'll try to break them down as much as humanly possible, so we can think through them. Yeah, so that was another question. I hope that answered your question as well. Tomorrow, 2:45 live stream will start. Richard, Farza, you did the best earnings call. If anyone has not seen it, no one does a better job. Farza, take the best notes. Thank you, man. Thank you, Richard. That's very kind. I'm lucky that I'm a fast typer, and so I'm able to sort of sit down and run right through the notes as much as possible, and hopefully it helps y'all to understand the earnings call better. Buck, what is going on? What's going on behind you? Are you at the gym? What's going on over there?
I've got some weird audio going. Hold on, man.
Oh.
Yeah.
All right.
Let me call back in, man, because I got a double audio thing going. Sorry. I'll call back.
No problem. Okay. He's like in the middle of like a set or something. He's doing like some bench pressing or something. That's funny. Do you have lease return sales in? I do not. I know Matt from Good Soil does. I do highly recommend, if you haven't already, our boy Matt and Emmett from Good Soil Investing. Here, I'll show you guys this video. I won't show it in full, but I'll show you what I'm talking about. This right here, my goodness. Let's see if I don't even know how to use a computer. This video right here, Tesla Q3 earnings EPS model by Good Soil Investment Management. Excellent breakdown by Matt Smith, and he has all that stuff baked in. He does a really thorough breakdown of every single line item. I highly recommend you go check out that video. And there's Yashu. What's up, Yashu? Just clicking random stuff now. Awesome. What other questions do you have? What other questions do you have, y'all? Let me know. Did you see the used Tesla inventory that includes FSD? 37,000 for a 19th Model 3 with 30,000 miles. What a lever to pull to move inventory that the competition does not have. Yeah, absolutely. I mean, that's one of the wins of having software as a service. This is something that most car companies can't do because they just don't have it as a part of their business model. Like it literally will be impossible for them to do this. They have no way of doing this. One of the best ways for Tesla to not just generate sales, but generate margin. I think that's really the bigger lever. Bastard. Why does Penn State suck? I don't know. It's because they have a really small defensive line, I guess. Don't tell me about how badly they lost against Michigan, okay? I already had a lot of pain over the weekend for that. For those that just joined, let me just bring you up to speed. We went through a model and for Q3 earnings, and the adjusted EPS that I calculated is $1.18. So this will be the number that's going to be compared to all the other Wall Street analysts. And I went through the sort of the model, the thought process behind it. As you know, if you're interested, feel free to rewind. It's the first, call it 15 minutes of the video. But it's $1.18, which is above consensus estimates. And what's really surprising to me is like, man, it feels like consensus is relatively bearish in this respect, which makes sense because, we are in a bear market, So, yeah, we'll see. Great job as always. You do a great job at Tesla Talk and bringing together the best of the best. Thank you, Barry. Appreciate that. That's very, very sweet. Thank you. What's your prediction for when the first Cybertruck is delivered in 2023? June 2023. Like the last week of June. That's my guess. Don't hold me to it. Maybe earlier. I don't know. A ramp rate for semi, typically 280,000 to 320,000 truck market per year. Yeah, I think when Tesla's fully ramped in semi, I expect them to do probably 250,000 semis per year. With an opportunity for more. There's about 2 million semi sales per year globally. So if Tesla reaches, say, 10% market share, that's 200,000 semis. That's a lot of semis. And there's a video I have on my channel where we broke down the semi sort of model. We did a semi model where we roughly thought through, okay, how is this going to impact Tesla's earnings and compared to the market? And I think 250, oh my God, my dogs are going crazy. Do you hear that? Wow. Sorry, guys. Freaking lunatics. Yeah, I think 250,000 semis per year is a realistic goal. I don't know if you can hear my dogs. I'm sorry. I have to think through. I've moved spaces, and some of the soundproofing is not great around here. I'm still thinking through that, but I do hope that's okay. I hope I didn't kill your ears just now. Yeah, do make sure you go check out Matt's channel at Good Soil. Thank you, Donald, for linking that. You do a great job. Oh, yeah, we can hear them. Yes, we have 2 dogs. They're crazy. Do you think Berlin plus Austin combined will do 700,000 in 2023? So 700,000 in 2023 is how many per week? So 700,000 divided by, call it 50 weeks. That's 14,000 for both divided by 2. That's 7,000 per week per factory. Maybe, because right now each factory is at like what? Berlin's probably at 2 or 3. Austin's probably at 2. So, I think they can reach 7,000 by the end of the year, for sure. I don't know if they can do. I don't know if the average for the year will be 7,000, but who knows? I mean, if you do have a situation where the global economy and the supply chain is sort of like has open capacity for companies that have the demand, then theoretically the entire supply chain will be able to support that sort of production from Tesla as long as they can have the factories open, right? So if they do 700,000 between the two, and then Fremont does say call 650,000. So sorry guys for the dogs. I got to get that figured out. And then Shanghai does say 1.1 million, 1 million. Then you have a total cars of, let's see, for the year, 2.35 million. That's I think it's possible. I think it's possible, but I think that's a stretch. I would get closer to like 2.2 million for the year, 2.1 million. It'll be a stretch. We'll see. The dogs are giving their Tesla estimate. Yeah. Maybe check for robbers. No, sir. That ain't happening. I'll tell you that much. There were robbers coming in. And my wife would have shot them already. She would have shot them. We got another person in. How you doing, man? What's up, Mats? How you doing?
Hey, dude. Thanks for doing this thing. Your lives is always great. I hope the quality of the mic is okay. I'm from Stockholm, so...
You sound great, man. You sound great.
Okay,
you look
perfect.
Great. How can I help
thanks. Dude, I have a question regarding investment grade. I thought we would have a much more interest. Do you think that this earnings call could get the ball, like the interest of buying the stock at this price now that we got the grade in?
Yeah, I think that's a very interesting question. So the way I think about investment grade, and so Alexander Mertz, for those that are not familiar, has done so much research around this topic and was one of the really big proponents behind pushing this. But the way I understand investment grade is that this is probably going to be like a long burn. It's going to be a multi-month approach. It's going to take 3 to 6, call it even 9 months until funds that can only purchase Tesla if they have investment grade will really start to get the ball rolling. Because you really think about these funds, they're conservative by nature already.
Yeah,
like they already said we're not going to buy any. We're not going to buy any. And now that investment grade comes out, then they're probably like, well, now let's do our math and research and see if it makes sense for our portfolio, right? So I think that's how it happens. So if Q3 and Q4. Which I fully expect will be good quarters. Like there's nothing that says it won't be a good quarter. They're a profitable company. They have a ton of cash, especially versus debt. It stands to reason that funds will start purchasing more shares of the company. But I really think, especially within the context of a bear market that we're in right now, where everything's getting beat up, it's going to be hard for people that were already sort of hesitant to buy it to want to buy it. Yeah. What it could do, though, in a bull market, like if say we're in a point where a lot of people want to buy Tesla stock, then we're going to have the additional boost of people that weren't buying it before will now be buying it as well. So especially if you have a buyback in place, if the buyback's in place, then forget it. Yeah.
And I have one more question regarding that, because when you have is it normal to have a buyback so close to a split?
I think it's irrelevant. I think those two things are just two separate things. A split, what it really does, I think what it indicates is that they believe that their stock should be more accessible to people that maybe can't afford it. That has nothing to do with, hey, we have a lot of cash on hand. It almost like it would make sense that companies that are doing really well are doing a lot of splits and are doing a lot of buybacks, because these are things that are signals of a healthy company.
I guess the guys, the co-workers that are available to buy the stock, they wanted to get the split in early for them to do that as well, I think.
Well, yeah, it helps employees. Yeah, it helps employees a lot, and it's a signal that says, hey, we think that our stock could go up higher in the long term, and we want to give people the access to buy it at a quote unquote cheaper price at an individual stock. So,
perfect.
Yeah, I think those two aren't connected.
Thanks, guys. Sorry for taking your time. I see.
No, please. Why are you apologizing?
Going. So, yeah.
No, you're good. Thanks, Matt. Appreciate you, man. Thank you very much.
Ciao.
You too. Bye. Awesome. New face to this stream. I haven't met Mats before, I don't think, but that was awesome. This community is great. You guys are so... give yourselves a round. This is for y'all. Thank you. You guys are great. You guys are awesome. guys are awesome. It's all good, Buck. It's all good. My signal is too weak for a viz right now. I was just going to discuss that I think the stock price is not going to make any big moves up after earnings, except temporarily. Prices disconnected from facts during this economy. When we've had sustained increase in share price in the past, it's been on news, which is not much different than now, but sentiment on the economy was positive. That's a very interesting take. That's a very interesting take. Yeah, I'm curious to see how that shakes out tomorrow. If it doesn't move a lot, then you can sort of make an assumption, at least for the short term, that the way you thought about that is likely maybe correct, and you could apply that to other quarters. So, but that's an interesting point. Everything changes when the market is bearish. Everything changes when the market is like poo-pooing everything, right? Where have I heard poop? I think Nick Kevin says that. Sorry, I hope it's not copyrighted. Oh well. Sorry, not sorry, I guess. Somebody asked a very interesting question, and I want to make sure that I catch it. Are you expecting a price increase in semis before they start shipping? Yeah, I really don't think the price of semis that they originally posted were what they're going to be selling at right now, because you've had inflation, you've had COVID, you've had a lot of stuff happen from when they announced it to now. So yeah, it's going to be probably they're probably selling it at 300,000 each, if I were to guess. If it's less than that, that's going to be crazy. It's going to be absolutely crazy. Question: what is your guess on percentage of Tesla employees that own the Tesla stock? Do you think declining stock price affects employee morale? And if so, would a small buyback would improve it? That's a great question, Kevin. Damn near 100% of Tesla's employees own Tesla stock, and mainly because Tesla pays people in Tesla stock. You can opt to get into their employee stock purchase program. Plus, when you get promoted, you get shares. You can opt to get shares. And I know they just recently changed sort of the thing where you can opt to get cash instead of shares. But if on the whole, I would garner damn close to 100% of all Tesla employees have Tesla stock in some way, shape, or form, that they bought themselves or that the company gave them. Definitely above 80%. Definitely above 80%. Here was the question. Will, Farzad, isn't Elon being on the call a bad thing? He mentioned he would only be on when there is bad news. Yeah, I don't know if he said that necessarily, specifically that it would be bad news, that it would be something that he needs to talk about. The way I think about it is that Elon has been on every call except one. So Elon is on all the calls. And just because he wasn't on one doesn't mean that he won't be on, that it's a bad thing that he's on. There's a lot going on. I think it makes sense for him to be on. I would want him to be on. You have that 20,000 car gap. You have a economy that seems to be going to a recession. You have a lot of global conflict. You have inflation. You have the Fed. There's a lot of things going on. And yeah, the company could be performing really well, but it helps to get the leader on the call to sort of guide you on, okay, this is how you should think about the company. And don't get me wrong, Zach, the one that he was leading the call, did such a good job. Such a good job. But there's just too much going on in the world. I think it helps. It sends a good signal to the investor, to have the leader on the call. And some people say, well, sometimes Elon hurts more than he helps. But I still think it's an important message. It's an important thing to have Tesla on, or Elon on the call. My opinion. What impact do you expect from ending the wave regarding logistics? The cost of logistics per call will go down significantly. The question becomes, how much is Tesla paying per car for logistics? I'm going to guess Tesla's paying somewhere around $500 per car in logistics, maybe less. Call it $500, probably less, honestly. Yeah, call it 500. $500. Probably less, but $500. It would probably go down by like 20-30%, but that's not a lot, right? That's like 20% of 500 is $100, $150. So it's gonna help. It's gonna help. What it helps really, logistics, where you get a lot of savings, is in your entire supply chain. So receiving product, shipping product, not just the cars, but everything, all the movement of everything. That's where you get a lot of your costs. So the cost associated to the pieces that you bring into the factory that you use containers for, or you use trailers for, or you ship in air, that's where a lot of those costs are baked, not necessarily like delivering the cars necessarily. But the wave is also part of that. There's also an upstream wave. You know, it's not just a downstream wave. You have to rush to get all the parts in so you can build the cars. And you don't want to really hold the parts on for too long, because then you just have cash sitting in your warehouses or in your factories as parts, not as cash. And so you want as much of your business to be in an asset that that's liquid versus something just sitting in your warehouse. And it really helps being lean. So think about it that way. The wave is like, so I guess it does, right? It does, because if it's upstream and that's part of the wave, it does impact it. So there will be a significant impact. I still think most of the costs are associated to the materials and the labor itself. The logistics and the transportations, probably like I said, no more than, I think like shipping the car is probably 5%, but all in, it's probably like 10 to 15% of the total cost of the car can be attributed to logistics. And so if it goes up by 10 to 20% on a $50,000 cost car, $5,000 of that is transportation, which seems high, but let's just say that's the case, you could save a couple $1,000 per car in logistics. Let me know if that helps. What other questions do you have? Let's go through a few more here. Will they announce new factories on this call? Because next one will be next year, and they said they would announce before year's end. It could be, or they could host its own event. You know, we could have like a announcement. I think when was the one that was announced? I think it was Berlin. Berlin was just a thing that Tesla put out there, like a press release that said Berlin, we're building it now. So it doesn't necessarily have to be announced on a call. It could just be announced anywhere. So, but I do agree with Richard's initial assessment that if there's going to be a surprise on the call, it should be this one, because just everybody has such negative sentiment overall, especially from a whole market perspective. Question: do you think Tesla will triple in 2022? What do you think? Oh, Yaman. Shout out Yaman. No, I don't think it's going to triple in 2022, but I hope I'm wrong. I hope you're right, my friend. I hope you're right. People are going to be talking about Elon's huge improvement, Energy's huge improvement, and Cybertruck update announcements after earnings. I hope so. I don't think Cybertruck's going to get too much. I think there might be like... you know what? I think Cybertruck will get a slide on the deck. I really think they'll get a slide. They'll announce the IDRA casting machine being complete. They'll announce maybe they've made some progress on sourcing materials. So it might get its own slide, or it might get like a section of a slide, but I don't think it's going to be that big of a mover. Like, you need to start seeing prototypes, and need to start seeing some pre-production models. Then at that point, I think it becomes a bigger part of the thing. But I hope the energy piece does become bigger. I really do hope so. Nick's Lemonade Stand. How you doing, my friend?
What's up, man?
How's it going?
Hey, good. I was at the gym when your stream started, so I'm like lagging 10 minutes behind whatever you're talking about.
You're listening to me while working out, bro. I'm probably like bringing you down.
It's good for my pump. And now, and now I'm jaywalking.
Nice.
So I wanted to talk about the buybacks, because it seems like everyone that's been opposed to it. I'm gonna stop walking here so I can think. Everyone that's been opposed to it has not, the way they've talked about it, it sounds like to me that they don't actually know what buybacks are. And I have a couple examples for us to think about it. But the first point is literally when you do the stock-based compensation, you're aware of dilution. There's more shares out there. So the earnings get divided by these shares. A lot of value investors hate to see companies do this because it's a real cost. Now the opposite is true when you buy back stock. So you're removing the shares from the market. All future earnings are now getting divided amongst less shares.
Yep.
So you get an EPS boost in perpetuity forever. So ideally, when the stock is trading at a low multiple, lower than it should, you're going to get a high return on that investment over time. Now, yeah. I'm not saying I've got two examples to think about this, because there's been people that say that this is just like an accounting trick, and it's really more than that. And it's not just a short-term boost; it's a long-term thing. But lost my head for a second.
No, you're fine. You're talking about how so you're going to have less dilution. You're going to have a boost in perpetuity from doing stock buybacks, and some people are not seeing it that way.
Yes. So, and before I give my two examples, I want to preface this with, I'm not saying that it's the best thing for Tesla to do right now, but it's been in the conversation in the community. So I want us to know what we're talking about when we're making these decisions or amongst each other. So the first thing is, so there's plenty of companies, stocks you can look out there where there's zero TAM, there's no growth in earnings, and yet the stock price does very well because maybe the underlying company is very profitable, but they're fully mature, they can't expand, earnings don't grow, but the EPS does grow because since they're profitable, they take their earnings that they can't reinvest into the company, and EPS grows over time, and they can be very good investments if you find the right one. So that's the first example. The argument against that is, well, Tesla has stuff to do with their money, and my point is, well, eventually they won't. I mean, their capex is so low compared to what their future earnings are going to be. So you're eventually going to have to just purchase the stock. So the second thing is just regarding like how people think it's just a financial trick. If you're giving dividends to imagine you have $1 in dividend for each share, and you remove 1 billion shares from the market, that saves you $1 billion on your bottom line every year in perpetuity. So it's more than just a financial gimmick, and I just want people to understand that.
Yeah. 100%. Yeah, I think if there is folks out there thinking that this is sort of like a way to boost earnings or for a way to look good on paper, it's definitely not the case. I think the points you make are extremely valid, and I agree with you. The way I think about buybacks is it's more around the kind of signal that Tesla's sending when they announce a buyback. Because Elon has come out and said, hey, like this is something we'll consider in the future. And anytime Elon says something, it kind of becomes true. It's always late, but it becomes true, right? So then the way I think about this is like, okay, cool. So you're confident enough to take cash from your balance sheet that in the previous years, really up through now, you've been very, very hesitant to do because you've been in hyper growth mode and you're kind of afraid of how your company is going to be performing. Instead, you're going to be willing to give this back to investors. And even if it's a very small percentage of your cash, the signal that says is that, hey, we're so confident about our business that we're not going to use this cash for us. We're going to use it for you. And that, to me, tells me that the company is extremely well run. In conjunction to growing 50% year over year, where that cash theoretically should be used for growing, the signal that sends is that we have all the cash in the world to grow 50% year over year. So we're going to get TAM, and we're going to give the cash back to you. So, but I don't care if it happens this quarter. I don't care if it happens next quarter. I don't care if it happens next year or in 2024, 2025. The signal's coming. And that, to me, basically secures the long-term vision of Tesla. And as investors, we get a tiny bit more, just a tiny bit more. Even if they do a $10 billion buyback, say in Q3, that's still 10% of $600 billion market cap is 60 billion. It's 1/6 of that. So 1/6 of 10%, whatever, 1.5%. It's a very small buyback, in comparison to the market cap, but it's more about the long-term signal.
Yeah. And you would do, like, if you announce something like that, you would do it over time, multiple quarters. It wouldn't just be like a large check in one quarter.
Yeah, exactly.
And so what you were saying about like the sentiment, the confidence it shows. I mean, that's multiple.
Just real
expansion.
quick, Nick, we got somebody waiting in the wings. Just want to give you a heads up. Yeah, if you just
I can get out of here. I was going to say, but there's a sentiment component too, where you get multiple expansion because there's more confidence, risk is off, and then you also get the bottom line numbers where it's more earnings divided by less shares. That's it.
Exactly.
I'll get out of here. Thanks, man.
You nailed it, brother. Yeah, thank you very much. Appreciate you.
See ya.
Take it easy. Bye. All right, Tesla Guam's in the house. My dogs are going crazy, dude. I'm so sorry. I don't know if you can hear.
No problem. No problem. Hey, man, I just wanted to.
Hey, there, man.
Greetings. I remember seeing your first video back in the day on Tesla employee perspective and all that. So, yeah, definitely thanks for all your uploads.
Thanks,
but
man.
I'll make it quick. I know everybody's talking about Q3 earnings and stuff, but just being from the islands, I just wanted to get your take on Tesla getting involved in the HVAC space. Do you think that'll happen anytime soon?
Yeah, I think HVAC is something that makes a ton of sense for Tesla, especially if you put it within the context of solar, So for solar to work really, really well, especially to really get a lot of savings. I mean, it works now from a cost-benefit analysis perspective, but it becomes even more so if the thing that's sucking up all your electricity becomes way more efficient. And Elon has talked about this. Tesla has talked about this, right? I'm curious to see where it falls within the context of like the different priorities that Tesla's working on right now. What's interesting about like when Martin talks about, hey, we have all the sort of like production and things that we need for us to really tackle our projects. In my head, I'm also thinking about HVAC and, I think that Tesla might get into housing. Like they might come out with like, and I know it's kind of like a fringe thing in the community, but why, if you're already building the roof and the battery and you're going to do the HVAC, just build a damn box for all this stuff to fit in, like, why not? It's like, just make the square. What else do you need? So, but yeah, I really think they're going to get into it for sure. Yeah.
Okay. I know you got a lot going on today, but besides just saying thanks, I just want to bring up, I'm super excited for Tesla because I think in the history, it's very rare that you have a genius who's also got unlimited funding. Usually, I guess, just through time and history, geniuses, they have all these great ideas. They have all these things that can change our world, right, for the better, but they always lack funding. So I think it's a really special time that we have one of the greatest minds ever, and he's also got money to back him up. So, but yeah, Parsa, thank you so much. I'm definitely going to be following your channel some more, and take it easy, man.
Thanks, man. Appreciate you, brother. Very kind words. Thank you. You're awesome. Thank you very much. Awesome. Such nice people in this community. Thank you, Nick. I'm sorry for cutting you off a little short there. Just we had people waiting there, but really the thought process behind the stock buyback was very, very correct, and I think it makes very, very valid points. But yeah, that was great insight by Tesla Guam. All right, everybody, let's call it. Thank you so much. Thank you so much. Do not forget tomorrow, you guys. Oh my goodness. Oh my goodness. What's happening tomorrow, you may ask? Check this out. Let me see if I can, if I'm good enough at plugging my own stuff. Of course I'm not. Why would I be good enough at plugging my own stuff? Ready? Here we go. 2:45 Central, 15 minutes before market closes. Mega live stream with all your favorites. It's going to be super fun. Come on in, have a good time. We're going to do pre-earning release talking, earning release talking. We're going to cover the call, and then we're also going to share thoughts after the call as well. Thank you all so much for joining us today. I hope you have a great day, and we'll see you tomorrow. Earnings. Be there or be... I don't know. You have a life, I guess. All right, everybody. Thank you all very much. Thank you, Yaman. This guy and his Tesla will triple in 2022. He just can't help himself. See you guys. Bye-bye.